Hey everyone, how's it going? Today is Wednesday, the 27th. We had Salesforce earnings at the end of the day, which Alan will talk about in a minute. But before we do that, I want to do two things. I want to give a shout out to Dennis Prost, a fellow follow the money trader, a incredible portfolio manager. If you ever need anything in regards to retirement funds, you want to talk EFTs, Dennis is your man. I was chatting with him yesterday and he mentioned USO playing oil. And he also mentioned XLE playing energy. And if you look at these charts, you see this same pattern for both of those energy and oil. So that was quite the call for him. I think he's still in it. Him and I talked about whether it's going to go the rest of the week. So we'll see. It's 4 days, 4 green days. We'll see if it continues. Secondly, I want to mention the app. There are two different versions. One that we're working on that looks like this, that is still in testing. And two, the Trade Room app that Andrew has been working on. The former is not available right now. This one actually is available. So hopefully you remember how to get into this. If you don't, feel free to comment on the screen or just reach out to me and I can get you onto this app. It's got a chat room. It's got triggers. So quite a valuable tool. So, and like I said, stay tuned for this app, which will basically run on a phone. So it's coming, just don't know when. And with that, I'd like to turn it over to Alan Asp, another member of the Follow the Money group, actually the leader of the Follow the Money group, and one that we rely on quite often. So Alan?
Yeah, Brian, can you bring down that CRM? I just wanted to show people what I'm looking for as a trader.
So we're looking at the chart of CRM.
Just did one. We just got to go a little bit lower, scroll that down on the CRM.
Oh, the options.
Yeah.
Okay.
So speaking of the apps, I just want to say that the apps are both excellent apps and that Andrew's done a wonderful job with it. I am currently working and I'm taking care of all the expenses for the systems that we use. And I know they're going to go ahead and be game changers. And so look for them in the future. You can get on the one right now. It's essentially doing the same thing. It's just the other app is more simplified. And for me and for others, I think you're going to find out it has, it's going to work out better to pretty much tell you what to do. I was so amazed, blown away, again, on the stock exchange, is that that's how all the algorithms work. And I actually never knew that because I never really knew, because there's a lot of computers there, but you don't know what they're tuned into. And so when I started asking questions, what is that computer software doing? Believe it or not, this is doing the same thing. The technology we are using now is the same technology that I saw being used. When I was in New York City and the JP Morgan traders, professional traders, they don't sit in front of a computer. It's all algorithms and the computers do the trading and that humans go ahead and make sure there's no errors. CRM, I knew it was going to beat the earnings. I actually didn't do the trade because I'm looking at the the calls, and I'm like, man, these are pretty expensive. So what I want to teach you, this is where I'm really, what you want to be looking at. What you want to be looking at is the shaded area. I am telling you, there's no one else better that I have found than Fidelity. Hands down, it's so simplistic, anybody can figure this out. The beginning of the blue starts at the 2250, 2740 calls, which is the 237.50 strike. What that means is that they take that number, the 237.50, they minus what the stock is trading for. Basically, that's what your premium is. Now, the interesting thing is when I've traded with people that trade with millions of dollars, they buy the deep in the money calls. They do not buy anything that's close to the strike. They are so deep in the money, it's not even funny. And I've always been fascinated on it. And I've asked them on it. And they said, well, the reason they do that is because if they're wrong, they want to be able to get out of the trade and still have most of their capital left. But the key thing is that you have your money position is at 250. Your hammer is going to go ahead and be at 260. And then the stock is going to run to 270. I don't even have to look at what happened after market because the thing is the options tell you what's going to happen. Now you go to the other side, there's nothing on the puts. There's no deep in the money puts. Everybody that's associated with the stock knew what was going to happen. They drove the stock higher. Money is equivalent to direction. Now, even if they would have blew the earnings, those people that have all this money on it, I mean, it goes all the way to 290. These money players would have bought the stock till it opened up and then they would have got out because they're not going to lose their money. So They don't have any choice. They got to do it. The funny thing is, I've always been fascinated with earnings because what happens is that it's traded after hours and really nobody knows really where it's getting traded. They could tell you that it's not like during the day. They can't tell you because you got dark pools. It's not traded through the standard exchanges like the New York Stock Exchange that close it for. So it's a fascinating thing. So this is what we're looking for.
Yeah, and you mentioned deep in the money. So doing a little simple math, if you take, so right now or at the close, CRM was 260, let's say 261. If you take these 237.5 calls and they last traded, let's round up to 24, that's 261.50. So you're basically, your intrinsic value is $23 and your extrinsic value is like $1.50. Now, if you look at these 260 calls, which basically have 85 cents of intrinsic value, you're paying $8. So for them to get that premium that you're paying to be intrinsic, it needs to trade up to 268. Whereas the 237 calls are pretty close to being all intrinsic. So yeah, it definitely is for those that can afford the deep in the money calls. That's where the money is.
And because I have done this hundreds of times, because I'll call myself the earnings king many years ago, that I guarantee you if they hold at 278, which is where they're at right now as we're speaking, that $800 is not going to be worth $800 tomorrow. You will lose money on that trade and you'll be right.
Right. Yeah, right. Exactly. Yeah.
They're not going to give you $8 because the earnings is over. The news is done.
Yeah.
So,
and these lotto players basically want to take their money and run. So as soon as that market opens, if it opens up, they're going to be selling. So which will drive CRM down.
Yeah. There's a chance it might explode at the open. But my experience is, and I always told people, if you're up, you sell it open. Because I have literally lost tens of thousands of dollars not doing it. And I just tell you that I've always went ahead and that's where I got my rule at, because I have never seen anything dramatically change as much as that when you're up a huge amount. I remember I was up $8,000-10,000 on an earnings trade, and I'm hitting, and I keep lowering it. And the next thing I know, it's 7,000, then 6,000. I'm like, we keep dropping and dropping and dropping.
Get out. Yeah.
And then the thing is, it will reverse usually, but sometimes it won't. So the key thing is that I've just seen the safe thing to do. But then the thing is that don't make the mistake when you sell it. Go ahead and watch it, because you can always jump back in. But it's always going to drop. You're going to always have, especially on a big increase, you're always going to have a drop. If you bring up DKS chart, you'll see what I'm talking about. We were looking at that earlier. This is a standard earnings. When I say this is standard, this is standard. You'll see exactly what I'm talking about. So DKS, and if you bring that up on the 5-minute, so what I'm saying is that it goes ahead, and in this case, you actually had some time with it, but you see how you had a high. So I always try to time it to get out of that high, but then the thing is, you see just a little bit later it drops. It always drops. That actually didn't drop as much as the chart we were looking at on Thinkorswim.
Yeah, and let's see if. Yeah, that drop.
Well, it just looked like that first bar that you saw it. But regardless, the thing is that one of the safest plays I've ever done is to go ahead and whatever the earnings does, we'll look at Google or anybody. Usually after it's released, it'll drop $20-30. A lot of times at 10 o'clock, it'll go ahead and do a reversal, but I'd say it's a 90% roll. That's kind of how I say things. It's a 90% roll.
Yeah, right. Yeah, and when you have money on earnings, you kind of want to do you don't want to do the risky thing. You want to do the somewhat, and not that earnings are predictable. You want to do what happens the majority of the time. You want to do, take the money, take the profit, and get out and see where it settles or see what it does.
Yeah, and you always say, well, I think of Google when it had its earnings, and I want to say that I sold it, dropped $20, but then the funny thing is it reversed, went back to 20, bought it again, then it went up another 40. But it doesn't always do that.
Right. Yeah, exactly.
So.
Okay, well, thank you. Thanks for going through CRM and the options that kind of portrayed where the stock was going to go after the close, which it's still up, moving up 86 to 268.50. So, Oh yeah. Well, thank you.
All right. Well, thank you, and we'll try the standard app right now and get acclimated to it, and we're gonna keep pushing that, and then we're working on some new technology.
Yes, definitely.
So.
Stay tuned.